Meta's fourth quarter EPS, 802. That is an easy beat. The street was at 678. Revenue, 48.39 billion versus the street's expectations of 46.98 billion. So that's beats there on the bottom and the top. Turning to the guidance, Q1 revenue, they're calling, Julie, for between 39.5 billion to 41.8 billion. Street was closer to 41.67 billion, at least initially here. You see the shares are a bit all over the place. We're down about 1% here.
The company says it's not providing a full year 2025 revenue outlook, but we are getting an outlook on expenses. Total expenses this year going to be, ready for this, $114 to $119 billion. That is more than analysts were anticipating at about $108 billion. Now we know that $60 to $65 billion of that is CapEx that's going to be used for infrastructure. And indeed, they say that's the largest single source of expenses this year. The second highest will be employee compensation as the second largest factor. They say as we add technical talent in the priority areas of infrastructure, monetization, reality labs, generative artificial intelligence, and regulation and compliance. And speaking of regulation and compliance, they also talk about that the regulatory landscape in the EU and the US could impact their business. So I guess the big question is, at different times in its history, we have seen investors be less patient and more patient about them spending money. Up till now, investors were fine, throw $60 billion at Gen AI. We love it, it's okay. Is that patience wearing thin or is it still intact?
It's tricky because, as you mentioned, it goes in cycles. Remember, everybody was excited, and then they overspent on the metaverse, and then no one wanted them to spend money. Now they're spending it on AI, and people are still okay with it. We'll find, we'll find out in the DeepSeek era whether that is the right move or the wrong move. I do think actually the market's giving them a bit of a pass because their AI model is more open source than the others, and so that may actually have proven to have been the way to go, and so the market's okay with it. But again, I still want to see how the market reacts to the guidance because obviously the numbers were such blowouts. And my constant refrain is it's all about the guidance. And the fact that they're withdrawing their guidance for the full year or not offering any is a bit weird. Their first quarter guidance certainly is lower than the market had hoped for, at least on a revenue basis. And so those are the kind of things that maybe no matter how good the current quarter is, that's the forward-looking stuff that might trip up the market.
Yeah, go ahead, Julie.
Sorry, just one more thing I wanted to mention here is that in contrast with some of the other Gen AI businesses we're talking about, one of the things that I think we've pretty consistently heard, Josh, from analysts who cover the stock is that Meta is one of the companies that is making money from AI today, that it is getting something of a return on its investment because of its ad technology, et cetera. So, we'll see what discussion there is of that on the call.
And speaking of ads, we mentioned the top and bottom numbers. Ad revenue also did beat 46.78 billion. She was at 45.65, so healthy beat there as well. As we discussed, when Zuckerberg says they're going to drop as much as 65 billion on AI infrastructure projects with DeepSeek AI, that's going to come up on the call. How he's thinking about that and the effect on CapEx. Maybe we hit a peak in CapEx. We'll see.